Guys, and welcome back to the channel. Today we'll be diving into three heavily discounted UK stocks that present incredible long-term value right now, especially in August. Before we jump in, quick reminder, when investing, your capital is at risk, investments can rise and fall, and past performance is no guarantee of future results. This video is for informational and educational purposes only and is not financial advice. Please always do your own research. But let's get into stock number one, which I think would be a good add today. And the first stock today is British Land, or ticker BLND. Now, time of recording is trading around 435.5 GBX, with a market cap of roughly £4.5 billion. British Land is a cornerstone real estate investment trust in the UK, having originally IPO'd back in 1951. That makes me feel old. Now, so what does British Land actually do? Well, they're a massive REIT focus on the ownership, management, and financing and development of high quality commercial properties across the UK. They operate primarily through two distinct segments: campuses, which consist of large scale, well connected office spaces, life science hubs, tech ecosystems in central London like Broadgate and Regent Place, and so on, and retail of London urban logistics, which covers the dominant out-of-town retail parks as well as the last mile urban logistics hub. Now, of course, the crucial part of this, and like most people do love a dividend, they actually do offer a 5.27% dividend yield. Now, they have been growing their dividend for a growth streak of just over 6 years and a strong 5-year average dividend growth of 8.98%, led by Simon Carter, which is very good indeed. So, as we can see here, like I say, 8.25% year to date. Year ago, you could be up by 22%, but 5 years and 10 years, you're actually being in the red. So, there's a little bit of discount there. It's still got way to go in terms of getting its 10-year high. I do like the stock, I think it's really good. And let's dive into why I do think this stock is good. So, of course, as you can see here, we've got the financials, we've got the revenue and profits, and we've got the free cash flow on screen here. Now, top and line metrics, they reported roughly over £523 million, but a net income of £454 million. You can see a significant swing back into profitability compared to 2023, where property revaluations impacted net income very costly. Now, operational underlying performance has remained remarkably steady, back strong tenant demand across their prime commercial campuses. Now, of course, the cash flow is a lifeblood of any real estate investment trust. Operating cash flow came in strong at roughly £309 million for 2025. Now, free cash flows reaching 185 million for the full year and 150 million in the second half year of 2025 alone. This reliable cash generation provides liquidity needed to fund ongoing development and maintain shareholder payouts. And talking about the payouts, here is the dividend breakdown, taking a closer look into that dividend that we mentioned. Now, the payout ratio sits extremely comfortably in my good old threshold of 50%. I always aim for 70% or lower. I know some people that I know aim for 60 or even less than 50. So showing that this 5.27% yield is heavily covered by earnings and cash flow. Now, while the 1-year dividend growth was modest at 1.4%, the 5-year CAGR does sit at 8.98%, offering an attractive mix of current income and long-term inflation protection. And of course, the stock number 2 is an absolute UK powerhouse, one that I do actually have in my portfolio right now, and that is Games Workshop Group, which also featured on this channel recently as well. Now, Games Workshop Group, or ticker GAW, it trades roughly 90,230 GPX, or £192.30 per share. Now, a market cap of roughly 6.69 billion, Games Workshop is one of the most remarkable growth and high margin stories in the FTSE. For those unfamiliar with what they do, Game Workshop designs, manufactures and sells miniature figures, tabletop strategy games, books, hobby supplies, but also they are most famously recognised for the world-renowned Warhammer 40,000 and Warhammer Age of Sigmar franchises. They operate globally through direct retail stores, independent hobby shops, and direct-to-consumer online web stores. What makes Games Workshop so unique is their two-pronged business model. Core, which is physical manufacturing retail sales of their miniatures, where they hold near monopoly on high-end tabletop gaming, and of course the licensing. Through licensing, they leverage their iconic property into video games, entertainment series, merchandise with virtually 100% profit margins. They offer a really good 2.55% dividend yield with an incredible 17% per year of the 5-year dividend growth. And that is all under Kevin Rudin. Now, as you can see here, looking at the chart, it recently pulled back, but over the year to date, it's actually up by 1.26%. A year ago, it's up 23%. 5 year ago, it's up 68%. Now, I know the title is heavily discounted UK stocks. Now, I think with the pullback, it does come into that because this stock is an add no matter what price. It's outperforming in all metrics, and I just think no matter the price this stock is, it's worth looking at to add to your portfolio. Now, of course, the financial track record here is outstanding, especially in my point of view. Total revenue grew steady from £369 million in 2021 to over £617 million in 2025. Operating income scaled from 152 to 262 million, while net income increased 122 to 196 million. Operating margins remain top tier in the consumer durables space, and that's due to the complete control over design, manufacturing, and IP rights. Turning to cash flow though, Games Workshop generated 247 million in operating cash flow in 2025. That is up from 196 in 2024. But notice how minimal the capital expenditure invested in cash outflow is, just roughly at £38 million in 2025. Now, because the business requires relatively low capital reinvestment, to grow almost all of that, operating cash flow directly into financial activities, which is what primarily is returned directly to shareholders as investment and dividends. So that is how they're getting their dividends to the shareholders. And talking about their dividend, here is the breakdown of it. And this is what the metrics were showing about Games Workshop. And they do boast a really good 5-year CAGR. The annual growth rate is so high that the payout ratio stands at 77% though, which is just over at the moment of my threshold. But I do take into account of what the metrics are doing in terms of revenue, and in all honesty, all of that is just outstanding. It was an ad, it pulled back. So even though it's over the payout ratio threshold for me, with the other metrics like revenue, growing its free cash flow, it is for me an ad still. But of course, people do have the different thresholds and ideas. So of course, it's reflecting an active management policy of returning all truly excess cash to investors via the dividends throughout the year. And of course, we are talking about our third and final stock. Another one which is in my portfolio, and that is Big Yellow Group. Now, Big Yellow Group is trading roughly at 902.5 GBX. That's got a market cap of £1.70 billion. Big Yellow is another premium UK real estate investment trust. Now, what does Big Yellow Group do? Well, they are a recognised brand leader in self-storage solutions across the UK. They develop, own, and operate modern, high-visibility, purpose-built self-storage facilities catering to both domestic and business customers. Their properties are strategically situated along major southern routes and urban corridors, offering secure storage units for flexi offices and logistics solutions. It is led by James Gibson, and Big Yellow offers a strong 5.14% dividend yield, with a 6.78% per year dividend growth rate on average. Now, of course, looking at the price action, Big Yellow Group has been hit by the wider REIT market weakness. It's down nearly 12% year to date and nearly 40% over the 5 years. However, long-term investors know the value of underlying real estate and dominant market presence. Now, of course, the stock is up over 830% all the time. Now, of course, past performance does not guarantee future results. So buying high margin sector leaders when sentiment is low historically has generated exceptional returns. Now, looking at the revenue trajectory, the total top line revenue has consistently increased year over year. Now it's grown 175 million in 2022 to 209 million in 2026. Operating income expanded to 129 million in 2026, and net income reflects non-cash property revaluation adjustments over time, but underlying operation income remains robust. In terms of cash flow, Big Yellow consistently generates healthy operating cash flows, delivering over 108 million in 2026. They continue to invest heavily back into organic growth through land acquisitions and new store openings. That is reflected in £101 million in investing cash flows in 2026, expanding their market share across high density regions. And of course, to round it out is our breakdown of the dividend. Now, of course, it offers a 4.99% total shareholder yield, with a payout ratio of course, over the threshold at 74.65%, but taking account that they are a REIT. Now, they've maintained a solid 5-year dividend CAGR of 6.78%, making the 5.40% yields a fantastic option for passive income investors who want to look into buying high quality UK real estate at a massive discount, in my opinion. Now, of course, like I say, the dividend growth in the 1 year is at 1.72%, and due to it being a REIT, the years of growth is going to be up and down, so it isn't going to consistently grow year over year. But of course, for the terms of how UK dividend stocks are portrayed, they sometimes have a semi-annual paying, so they do like an interim and they pay a final. So of course, that's why the years of growth is going to be reflected as only a 1 year growth. So it's always good to have a look in terms of research, in terms of stocks at dividends. But I hope you guys did enjoy, and if you did want to see more, of course, leave a like, hit the subscribe button, and comment down below if any of the stocks are already in your portfolio, or comment down below what other stocks you want me to cover in the next one. Hope you guys did enjoy, and I'll see you later. Goodbye.